Hello, and welcome to this week's Motor Trade Radio podcast. Powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters from across the franchised and independent dealer sectors.
Well, here we are with episode 2 of the year, Phil, and we've got quite a busy show lined up today, haven't we? Because we've got a few shout-outs, we've got quite a few headlines, topical headlines to go through, and we've got a visit from Stephen Whitten for his regular Menable moment.
Yeah, but he's somewhere warmer than here.
He is, yes. Yeah, he is somewhere very warm, and as we'll find out with the recording, somewhere fairly windy because he's outside, isn't he, as he records it, as he takes in the sun.
Yeah, we need to get him to invest in one of those little fluffy things for a microphone or something.
Yes.
It sounds like he was on his balcony enjoying a whatever he drinks in the morning or whatever he did. But yeah, we'll get to that halfway point. But yeah, without wishing the month away and the year away, we're just past that halfway month of January already. So it won't be long until we're in February and you can put January, the first month of the year, behind you. But clearly, as Curtis has said there, you know, there's still a lot happening in the sector and hitting the headlines. But yeah, we've got quite a bit to come up, haven't we?
We have indeed, yeah. So the first shout out this week is for the VRA January meeting. So talking of January, this is coming up on the 22nd of January at Meriden, which is near Solihull. And this is the first VRA meeting of the year, members meeting of the year. And what can members look forward to? I know you're heavily involved in organising this one, Phil.
Yeah, it is the first one. I'll be chairing and hosting the first one of the year down at, as you say, the Epic's offices down in Meriden. I think we've got about 45 people in person and about 15 online at the minute as we sort of build the attendees. But yeah, clearly we're going to get a quick update from Chris Plum for the current used car market. He might give us a bit of a van LCV market update as well, but really talking about sort of crime within the sector. There's a lot going on about number plates at the minute, so we're going to be discussing the changes to the number plates, and you keep hearing these things like the ghost plates and these bubble plates, and there's all these 3D and 4D plates. So there's quite a bit of legislation that's coming out around the use of number plates, and that might be new one to you, Curtis, talking about ghost plates. But you know, cybersecurity is going to be on the discussion there, and friend of the podcast, we've got Mark Rose, who's the CEO down there at Tracker. Going to be talking about what they're seeing in theft of vehicles and security issues there as well. So I'm sure we'll talk a little bit about mileage correction or mileage fraud as well. So yeah, quite a topical discussion to kick off the year down there on Thursday the 22nd.
Yeah, definitely. And I hope you're not suggesting I've got a ghost plate.
I'm not saying anything. Yeah, I know. I'd rather have a ghost plate than a bubble plate if you've ever...
Well, you know what? I don't know what a bubble plate is. So if I did have one, I wouldn't know.
No, have a look. I'll leave you to Google that one after the...
Okay, thank you. So this week, as we've mentioned, we've got Steve Whitten after the midway break, with a special focus on some of the pressures and stress levels facing owner-drivers. So really getting Menable moments underway for the year.
Yeah, and next week, do keep an eye on your podcast feed, wherever you listen to us on your podcast. We've got our first of the year regular catch up with Steve Young, as you know, as the leading industry guru and MD of ICDP, and obviously the newly formed, and say it's just a year in now, the independent automotive analyst there, and is MD of Auto West London, which is a Moda and JQ dealership down there in London, just launched nearly 12 months ago. So keep an eye on your podcast feed for that. So I think you'll probably find that's a pretty good one for this time of the year.
Yeah, and it'd be interesting to hear his take on Moda and JQ, because there's lots going on at the moment, and they did have a particularly good year last year. So we'll get him to talk about industry issues, as well as the challenges and opportunities he's seeing as a dealer boss. And also in your podcast feed this week, we hope, fingers crossed, we're due to have the first of this year's supplier specials. Now, we can't say too much about who it will be with, but we can say it's a US-based automotive tech company who are starting to make inroads in the UK. So do look out for that on your podcast feed next week.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo. If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers and decision makers on one of our supplier special episodes, then get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured in our supplier specials include Prospecting Dynamics, iVendi, ETT, Generational, and Jigcar, amongst many others. And you can find them all in your podcast feed. And if you would actually like us to profile your business, then just message Philip or myself on LinkedIn or email us at motortraderadio@yahoo.com.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
Headlines this week come from The Times, Daily Telegraph, Car Dealer, AM and Motor Trade News. Starting with falling sales will see diesel vanishing from some forecourts within 4 years, claims an EV think tank. Chancellor Rachel Reeves is preparing to cut electric charging costs amid fears that the forthcoming pay-per-mile tax will kill off EV demand. Used EV values fell more sharply than any other fuel type in December as aggressive new car incentives hit forecourt prices. Citroen has a cunning plan to help its dealers put a miserable year behind them by winning back customers in 2026 with new EV models and a bit of a marketing rethink. We'll look at an influx of second-hand cars from Chinese brands and how that's likely to have an impact this year on used car dealers. And we finish with the Musk factor and why 1 in 3 Brits say they won't be buying a Tesla. And that was before the current Grok AI controversy.
Yeah, he's not a popular man at the minute, is he?
No, especially here in the UK.
No, definitely. So, as Curtis has said there, we'll head it over to the Times for the first story. And as said, diesel may vanish from forecourts within 4 years. And this is saying that obviously demand is falling so quickly that some filling stations in London may stop selling the fuel by 2030, using the space for electric vehicle charging points. Now, yeah, I mean, it's an interesting story in terms of obviously they're trying to focus it on London and obviously all the congestion charges and the ULEZ zone and everything else that's happening in the London zone and taxes, etc. But it does bring to question of this forecasting compared to the used vehicle part. But we'll get onto that in a minute. But this is the report by the electric vehicle think tank. New Automotive predicts that some filling stations in London will stop selling diesel by 2030. Nationally, many of the UK's 8,400 forecourts are expected to scrap it by 2035. I mean, what do you think of this one?
You know what? This story, when it broke early in the week, my sense of it was there's a bit of scaremongering going on here because we're looking at the Times coverage of this, but it was also covered by The Sun. Of course, the Sun and the Times, both owned by News Corporation, but The Sun did a big front page splash on it. And you'll like the headline that they ran because it was just 2 words and it was bin diesel. which kind of said it all. And looking at the story, it looked as though diesel pumps will be phased out at a rapid rate, really, because of the way that the new diesel sales are falling. But one of the things that both stories didn't really take into account was the existing diesel car park, which is huge,
Yeah.
and it's not going anywhere in a hurry, is it?
No, and that's the thing. I mean, you and I were chatting before the show. I mean, as of the latest figures at the government, that in 2025 there's 10.4 million diesels on the UK roads. That's cars, not counting for your coaches, your buses, your LCVs, your HGVs, and everything else that uses diesel. So, and petrol and diesel make up 29 million for cars out of the 34.3 million at the last stats at the end of 2025. So you do feel that I get where they're going in terms of the slowdown. If you look at the lost volume, if you look at the last 4 years, including 2025, so looking at 22 to 2025, there, we've lost 1.39 million diesels.
Yeah.
From sales from what we saw in the previous 4 years. So you got 72% drop in diesel sales. So they are falling, and it's falling quite aggressively in terms of those new registrations and vehicles available. But you just can't discount the fact of how many vehicles are actually on the roads that require diesel. I can understand some of the forecourts, maybe in certain areas that do not get the demand, but I think it's very ambitious to sort of say that it'll be in 4 years before you be gone from a lot of the forecourts.
Yeah, and bearing in mind this, the stats for this particular story were produced by New Automotive, who are a EV think tank, and within the story, Ben Nelms, the chief exec, is quoted as saying that these falling volumes are pushing forecourts towards a commercial tipping point. And he goes on to say, if fuel sits in tanks without selling at pace, it degrades. Going on saying, as diesel availability tightens, many motorists will conclude the smartest option is to avoid the headache and go electric, which I can see what he's saying, but I think that's a little simplistic. Just because new diesel sales are declining, I don't see that as a reason for people who would traditionally buy diesel cars to go electric, because they will be looking at used diesels if that is their preference. If they're high mileage users, then they'll be looking at used. So I think that this story it does shed some light on an interesting talking point, but I would question some of the arguments behind what they're saying on this.
I think it's like anything else. We talk a lot about dealers and their forecourt fuel type makeup or profile, should we say. It's changing. It's not now 60% diesel and then everything else. Yeah. So the landscape, it's evolving, and even forecourts, you may get fewer diesel pumps. You may get more EV chargers, and you might get fewer petrol pumps as well, compared to what you might have today. But disappearing, I think, is a little bit strong, because there is still going to be demand. I mean, what was it, the old petrol that we used to have? How long did that stay around on?
The old 4-star.
Yeah.
Yeah.
There was still a demand for that fuel type for those old vehicles, bikes, and lawnmowers and other bits and pieces. So, and the filling stations will still service demand. It might be fewer, they might hold a smaller tank or whatever, but I think disappearing is a little bit.
Yeah, I think you're right. I think what we'll start to see over the next several years is maybe just one diesel pump on a forecourt, but that pump will stay there for some time. And there is a bit of balance in this story, because Steve Gooding, director of the RAC Foundation, said that where EV drivers were once worried about access to charging points, he makes the point that diesel motorists may find themselves anxiously seeking service stations where they can still fill up. But he does go on to say, and he makes a valid point there, he warned against declaring diesel's demise prematurely, noting that the van sector and haulage industry remained heavily dependent on it, which is a point you made. And I think that's the actual crux of this particular story, because there's an awful lot of vans and lorries out there that will require diesel in the future for some years to come.
Exactly, and you don't know what's going to change in the future to the government policies and deadlines and things like this. So I think this kind of thing, yes, the landscape might change, it might evolve, but I don't think it's quite dead in the water quite yet. And talking about that and government and things like that, we're heading over to the Telegraph. I've got some big headlines for you this week. So Treasury scrambles to cut electric car charging costs over tax fears. Now, this one is, again, quite... I'll try and not get on my pedestal on this one as well, Curtis. But
no, you go for it. Go for it.
This is obviously now talking about Rachel Reeves, preparing to cut charging costs for electric vehicle drivers amid fears a new pay per mile tax will kill off demand. So I think the positive bit, at least the government seem to be listening a little bit there to the pushback on this pence per mile charge, but it's what they're thinking of on this, isn't it? That, looking at other ways of recouping revenue, and they're talking obviously about reducing, looking at reducing the VAT. So 20% VAT rate currently applied on public charging. But that begs the question that you raised, Curtis, that they'll have to find the revenue from somewhere else, won't they?
Yes, yeah, definitely. Now, this is a debate that's been rumbling on for some time now. The 20% rate on public charges makes it a lot more expensive than charging at home, where the rate is at 5%.
Yeah.
And within this story, that says that officials have held meetings with government officials have held meetings with industry experts in recent weeks to discuss options to reduce the burden on motorists. So they are clearly looking at this 20% rate and what can be done to bring that down, bring it possibly more in line with the 5% domestic rate. But that will give the government, the Treasury, a shortfall that will have to be made up somewhere else.
Maybe, just for argument's sake, maybe the 1.2 billion that they announced at the last budget to increase the vehicles on the electric car grant, that is creating a price war and residual value volatility, which we'll get onto shortly about used vehicle EV prices, that they could have used that 1.2 billion and put it into subsidising public charging costs to get that cost of ownership of an EV down for those that haven't got home domestic charges. Just a thought there, Curtis. I don't know what your thoughts are on that one.
I totally agree with it. And within the story, they do talk about this so-called pavement tax. So if you can't charge at home, you do face this disparity, and you are effectively paying more because you're dependent on the public charging system. So there is a lot of inequality built into this that really does need to be sorted out. Now that we're starting to see the sort of critical mass of new EVs being sold, and it may be that we get to a point this year where that acceleration starts to slow down because of this.
Yeah, that's the risk with it all, isn't it? And I say, the story in the Telegraph is quite detailed. I would urge anybody when we share the newsletter on Monday morning to have a look at it. Some interesting graphs there, looking at from the HMRC and the OBR, talking about obviously that planned pence per mile tax and what revenue that will generate. But then when you put that against the loss in fuel duty that the Treasury is losing, it's a stark reminder that they're not going to recoup it, are they, the way they are going about it at the minute. So again, it's going to be interesting to see how this one does start to play out.
Yeah, definitely. So moving on, the next headline is from AM, and it is used EV prices face year-end pressure as new car offers way. Now, this is based on research that was done by Cazoo Vehicle Intelligence, really looking at pricing over the course of December, some of the trade values in the sector. And it found that used EV values fell more sharply than any other fuel type over the course of the month. And the Picasso is suggesting this is because of the aggressive new car incentives, as well as typical seasonal slowdown combined to weigh on the public, on the plug-in sector. And the figures show that used EV values at the sort of typical 3-year age point declined by 2% in December. And, as I say, the largest drop across any fuel type, which equated to £350 per vehicle. So some interesting observations on here. We don't know if that's, restricted to December. In a week or so's time, we'll know the picture from January. So it's one of those trends that we can start to watch.
Yeah, and it is. I mean, it's quite an interesting one, that one, because I mean we covered last week in terms of those full year new car registration figures, and clearly in December we saw that significant uplift of registrations for battery electric vehicles. It took an 8% change year on year in December, but suddenly took a 32.2% market share.
Yeah.
So you kind of question, that tactical activity that's been taking place throughout 2025, and to Picasso's point, how much is that influencing, that pressure on used EVs? Because the full year, as we said last week, you've got a 23.4% market share for the full year for 2025 for battery electric vehicles, but December is 32.2%, which would indicate there was maybe a little bit of year-end activity taking place there. Curtis, I don't know what your thoughts are on that.
I would suggest that that indicates there was a lot of year-end activity going on in December. And in fairness to Picasso, they've actually started looking at January already, and they're saying that January pricing has been relatively flat, suggesting the market has worked through that year-end slowdown and is set for a steadier first quarter. And this is something we'll definitely be returning to, because we will have our monthly cap updates with cap HPI, and they'll be looking at January and how that compared with December.
Definitely. But we'll be back with the rest of this week's headlines after this month's Men-able moment from our mental wealth guru, Stephen Whitten.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors and Cazoo. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media. Next up is our latest Men-able moment, looking at mental wealth and well-being best practices in the automotive sector, with me, Stephen Whitten. Hi everyone, it's Men-able Moments time, and Happy New Year. Hope you're well. Second week of January, and I guess you're on full pelt now for the year ahead. I myself am doing a little bit of reflecting and considering and looking back, and also a fair bit of planning and plotting, and that actually looks a lot like a week in Gran Canaria. So I don't know about you, but I hate January. It's cold, it's dark, it's miserable, and for my own mental health and mental wealth, for the last 4 years now, I have given up the ghost on around about Christmas Day-ish and booked some time in Gran Canaria, and here I am. So anyway, enough about that. What I want to share with you is a couple of things, and something I saw a couple of weeks ago was about recognising the difference between attention and intention, and that really resonated with me, because I thought, on the subject of mental health, what I've seen an awful lot across our industry is a lot of attention paid to it in the form of, creating awareness and, putting posters up and telling people about it and stuff like that. But what we probably need to move to now is a lot of intention. What are we actually going to do to create cultures, workplaces and ways of being that make it safe for everyone. The world is changing, and 2026 is looking like it's going to be as tough and challenging a year as the last few have. And we need to really consider the welfare and well-being of the people around us. Now, with that in mind, I did a little bit of a session with, I'm going to give a shout out to Nathan Taylor at Walsall Wood Tyre and Service, who brilliantly closed his business on the 2nd of January and got all of his team together for a little bit of a look at what's coming, how the year is being panned out and what's going to happen ahead, and really just an opportunity to look at the challenges and how everyone felt. I had a little stint on that session, and I wanted to remind them of some principles that I've tried to live by and I think pretty much succeed most of the time, and thought I'd share those with you as this month's Men-Able Moments. Now, those of you that are as long in the tooth as me will remember way back in the 90s there was a fantastic video that did the rounds about a fish market in Seattle. And the guys who worked in there shared how they make it through their day, because it's a very tough environment. It's cold, it's dark, it's miserable, it's a fish market, and it's not in the warmest place on the planet. And so they make their way through their day by using these 4 principles. The first one, choose your attitude. You really can decide who you're going to be, what you're going to be, and how you're going to be every minute that you are in the business. And there is a lot to be said for taking time out to readjust and, check in with each other and make sure that we're all okay. So the first principle is choose your attitude. And this is why I've said about getting away in January, because the month is dark and it's depressing for many people, and they may feel that they're a little bit out of control in terms of their attitude. The second one is be there. It's literally about being there and making sure that you connect with individuals, be present, be aware of what other people's needs are, particularly customers. The third one is play, and that's actually about having fun in the workplace, having some time where you all connect properly with each other and really enjoy each other's company. I mean, you are there 70% of your time, and make sure that you use it as a playful opportunity to get the work done and get results in. Now, ironically, what the guys in the fish market talk about is that when you do that, customers want in on it as well. And that also then creates a great environment for your customers to think, wow, what a great business this is. And the final one is make their day. And that links all of the 4 together, and they're not in any particular order, but make their day is about the way that you interact with other people. It's particularly aimed at customers, but it also works on each other in terms of that whole thing about being kind, remembering that everyone has a story and we know nothing about what's going on for other people. So there you have it, 4 principles to take into the new year. Choose your attitude, be there, play, and make their day. And as always, if you need any help with any of that, please give us a shout. I'm very increasingly aware that there are a lot of leaders, managers across our industry, and particularly those owner-drivers of smaller businesses whose mental health is taking a bit of a battering, if I'm honest, from some of the things that I'm being told. So again, please guys, feel free to pick up the phone, reach out, contact me and anyone else that you feel that you want to get some support from. But you can get hold of me at stephen.witten@menable.org. Catch you next time.
Well, I think only Steve Whitten could make a connection between a fish market in Seattle, Gran Canaria, via a reference to Clint Eastwood's favourite catchphrase. So, well done, Steve. And joking aside, some points well made there, because January can be a depressing time of the year. And as Stephen says, do get in touch with him. If you've got sort of any concerns about how mental wealth is being tackled within your business.
And unfortunately, our headlines this week are not helping.
They're not, are they? They're not.
But talking of headlines, we're going to head back to AM Online, and this is Citroen wants its dealers hungry to win back sales in 2026. Now, obviously, when we discussed the 2025 registration full year volume, I mean, we did mention obviously the challenges that Citroen had faced last year in losing quite a big, significant market share, didn't they, for the year? I think they were down like 31%, I think, year on year.
Yeah.
In terms of that volume. So, they went from just over 30,000 in 2024 down to just over 20,000 in 2025. So, they're not the only ones, but they have felt quite a bit of pain, haven't they, in terms of the market share.
Yeah, they're actually one of the biggest losers because we last week we did the top 5 winners and the bottom 5 losers, and that they were in the bottom 5. As you say, registrations down by getting on for a third to just 21,000 units. And to give that some context, that's less than Dacia and Cupra, who were certainly once considered smaller niche brands compared with Citroen, and being outperformed by likes of BYD with Jayco and Omoda nibbling at their heels. So certainly losing market share to some of the European brands and definitely some of the Chinese brands. But they have a plan, don't they?
They do, yeah, and this is, as I say, they've talked about delayed product launches, challenges such as the Takata airbag recall campaign that hit the dealers throughout the year, and Citroen UK's managing director Greg Taylor was talking to AM Online that one of the 3 priorities to ensuring their earnings improve is exponentially in 2026 there. So, he's trying to sort of say that, he's got to get back the Citroen back to their historical levels and drive volume and profitability through their dealer network. And that's through sort of marketing campaigns and other things, isn't it?
Yeah, it's really looking at the way they market the brands to potential customers and indeed new products. And this is a point we made last week about some of the brands who did badly, because a lot of this is down to where they are in their product cycles. So I think this is really showing that Citroen is being very upfront about the challenges that it has, but it reckons that 2026 is going to be a better year for the brand because it's got the products, it's got the marketing, and it's just trying to get the dealers and indeed customers back on board, back on side, and really go for it this year.
And like you say, I mean, new product coming in, different product that they've got offering, and backing that up through various different marketing campaigns through areas such as TikTok and other things. So really trying to re-energise that Citroen dealer network and get people back on brand again. So hopefully we will see more from Citroen this year. But speaking about brands and heading over to Motor Trade News, and this is that Chinese brands to define 2026 used car market. And this is through the Startline study saying that 50% of the dealers that they surveyed said that the move to EVs will be a trend in the used car marketplace. Now, obviously, we're fully aware that the Chinese brands are not fully EV. I think that's a misconception that, half of BYD sales really go through the hybrid products, and similarly with Omoda and Jayco, as we caught up with Steve Young on one of his calls, that, it's a lot of hybrid product goes through these Chinese manufacturers. But it is talking about, obviously, what that now looks like for 2026 in terms of, the volume that's gone through some of these Chinese manufacturers, but actually by default of that, what starts to come back into the used car market.
Yeah, so this research, so it's part of the regular Startline Motor Finance monthly research, found that 53% of used car dealers that it polled think the popularity of the new Chinese brands will be a major used car market trend of 2026, which is an interesting observation in itself, because as we know, the certainly the Chinese brands that do sell EVs have enjoyed exponential growth over the course of last year and year on year. Those that have been around for longer than 12 months, they're all enjoying huge growth. And as they do, those vehicles will start to come back into the used car sector for the first time. And I think this is just showing that dealers, it's on their radar. They're aware of this. They know at some stage they're going to start coming back in, and it's how they start to retail these cars. And I suppose it's a particular challenge for independent dealers and car supermarkets, because whilst most of these will probably go back into the franchise sector, we'll start to see them going into the independent sector, won't we?
Yeah, I mean, that's it. I mean, I think just recently, Moda JQ have launched an approved used car scheme for their product, and obviously, key for any manufacturer is trying to keep the early products, the short cycle products, within their network. It's it's one way of looking after their dealer partners, and secondly, trying to protect residual values to manage that process. But as you say there, I mean, if you look at BYD as the shining example, 2024 they're just short of 9,000 registrations. 2025, 51,400 registrations. So some of that will be demonstrator stock. It'll be display stock, courtesy stock, and short cycle that will be coming back in to the market. And some of that would have gone through rental, leasing, short cycle leasing, etc. So I think clearly what the start line, I think the dealers that aren't necessarily aware of some of this product, there may be some good opportunities for them in 2026, and then we're heading to sort of 2027, because if you look at BYD obviously leading it there, and keep Tesla and MG out of this for the minute, but JQ and Moda quickly coming up behind in terms of their volumes, in now starting off quite heavily in 2025, 2026. I mean, JQ 2025 to 28,000 registrations. So some of that will be on short cycle. And again, similar to the other things, so the JQ's coming back into the market, just short of 20,000. Modas were registered in 2025. So again, they did 3,500 in 2024. So some of that stuff will start to creep back into the marketplace, and it'll be a case of now what did it look like as a used proposition against what they were new, and how the dealers get on with it in terms of that have been watching on the sideline with some of this to see whether they do hold their own as a used vehicle proposition.
Yeah, and they'll be looking very closely at values, some of the trade values that are coming through over the coming months. And just to finish off this story, Startline also identified some of the other key trends that dealers are looking at for this year in particular. So half of dealers said that the move to EVs will be a trend in the used car market. 38% said this year would be defined by the ongoing shortage of good stock. One of the points that really sort of stood out for me was 37% of dealers expect increased dealer use of artificial intelligence.
Mm-hmm.
Buyer interest in plug-in hybrids is being listed by 35%, and the availability of car finance among 25%. So, some interesting trends, potential trends there, especially around AI. A lot of interest in AI.
Keep an eye on our supply specials, previous and forthcoming, on the subjects of AI going forward, but we'll say no more. And our final story, and I know you really like this one. This is on Motor Trade News, that a third of Brits less likely to buy Tesla after Musk payout finds the Harris poll. So, yeah, he's not best loved, is he? And obviously the recent shenanigans with his annual bonus that got passed, and subsequently some of the things that are happening now in the media about X and other things is, it seems to be turning UK drivers off the product.
Yeah, very much so. And this story did interest me in particular because it's based on research done by the Harris poll. So, respected pollsters looking at trends within automotive, because they look at brands across different sectors, and this one is particularly looking at Tesla and some of the impacts that Elon Musk is having on the brand. So within the story, it's suggesting that Musk's $1 trillion payout recently announced, combined with his visibility in the media, that's a bit of an understatement,
Yes.
is making 1 in 3 Brits less likely to buy a Tesla. And goes on to say that Musk's political views already triggered visible action from UK campaigners, because we saw those protests probably getting on for 12 months ago outside Tesla showrooms, and some of the public calls to boycott the company's vehicles and charging network. And also within the results that have been produced by the Harris poll, it found that 41% of consumers felt the payout would make no difference to their purchase behaviour. 36% said Musk's compensation package and political commentary would make them less likely to purchase a Tesla. And that rose to 43% among older buyers over 55. But I think this is really shining a light on the impact that Musk, who is really, in terms of a manufacturer boss, he's out there on his own, isn't he? There's no one of a similar profile within our sector, and the findings of this poll really do suggest that he's proving to be a turn-off for the brand, and it really does present Tesla, and in particular Tesla dealers, with one hell of a challenge, doesn't it?
It's not pretty. Watching it all roll out, and his share prices are reacting as volatile as well as everything else. So yeah, it is interesting findings, and I think clearly the poll does show that it isn't just about the vehicle, that other things do significantly play into consumer attitude and decisions towards what they choose. But hopefully we've covered a lot of the big headlines this week, and as always, we'll cover all these headlines with the relevant links on the newsletter on Monday morning, which, as the jingle says, it'll be on your feed on Monday morning. If you haven't subscribed, then head over to the Motor Trade Radio Podcast LinkedIn page, and you can subscribe to the newsletter there. Keep an eye out next week. One for the catch up with Steve Young from ICDP for the first sort of chat with Steve for the year 2026 and get his view on a few things there. And obviously Supplier Special, which will be on your podcast feed at some point next week as well.
That's looking like a busy week, isn't it, Phil?
It sounds already. We better get some best this weekend.
But that is all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors and Cazoo. We'll be sharing all the URLs from this week's headlines in our newsletter on Monday morning. To subscribe, just search LinkedIn for the Motor Trade Radio podcast.